Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting from now the Asian session live market analysis for another 45 minutes. So on 23rd of April, I'll be giving the forecast for the week 23rd to 27th of April, the derived forecast, and on a daily basis, we'll be doing the market reading to find out how exactly the market is making the moves, either on the upside or on the downside. Still, in our trading decisions, we use trading strategy to limit the risk and maximize the profit. So it is yet another week of analysis. On Monday, I will try to give the forecast for the week, and Thursday, that is coming 26th, I will review the forecast, what I have given, and also explain to you what are the market moves they have made. And finally, we'll be able to understand how these three are to be combined. Derived forecast, market reading, and the trading strategy are to be combined in order to make successful trades in the market. Because our main objective is to make money and not to simply say that my forecast is great or my market reading is great, my trading strategy is great. That is of no use unless and otherwise we make money out of that. Now, with regard to the derived forecast, it is derived based on the algorithm. It is statistically derived using various inputs, and that is a proprietary software. With the help of that, I am trying to give the forecast for each of the sessions of the day, and that is being displayed in my blog, iknowindices.com/blog, on a daily basis. Besides, on Monday and Thursday, I'll give the forecast in this Asian Session Live Market Analysis webinar for your reference. So you will be able to get the derived forecast and use it as a guiding factor, not totally depend on that. Use it only as a guiding factor. Okay, what could be the possible trend, and it can go wrong. Then use the market reading. The market reading technique I explained many times, that we try to note down the initial low and the high around 3:30 GMT with the help of the live market put page in 4 majors and 2 commodity pairs, and try to relate such highs and the lows set for the day with that of the current market levels, and try to find out whether the market is on the downtrend or on the uptrend, depending upon the type of moves they're trying to do. And the type of moves also happen in sequence. So once we identify whether they have done the stop trend or a false move, the next move is going to be either intentional move or the extended move. So depending upon the move, we are able to identify whether they intend to make an intentional move. If they just continue to hold below the low, new low, or continue to hold above the new high for more than 2 hours, we identify that they wanted to make the intentional move on that particular trend. So we just wait for the 2 sessions to get over to initiate a trade. So this is how we try to identify the sequence of the moves and then try to take safe trades, and that trade is likely to give the maximum profit for us. So that is how we try to do the market reading. Still, our forecast and the market reading can go wrong because the players act against the herd of traders. When the herd of traders have taken long positions, the players are not here to rise and give profit for such traders. Similarly, when the herd or the majority of the traders are short sellers, the players are not here to drop to give profit to them. So whatever be the type of analysis we try to use, either technical or fundamental or algorithmic or whatever it is, but if majority of the traders have just gone with that of the market sentiments, the players act against that of the market sentiment in order to earn their money. It is not that they want to just give wrong information to that of the traders. It is just to earn the money. So what they do, they just create the market sentiment and act against it of the traders and earn the money, then pretend from next week the market is moving as per that of the technicals and fundamentals. So that is how they try to do it, and we try to give various interpretations. So it could be the Friday short covering because of that euro and GBP have gone up, or the real strength, or a technical strength, or a fundamental strength, or whatever it is. We try to give some attributes for that. The next week we find again the opposite is happening in the market. So in order to limit the risk, so we need to use the trailing hedging order in loss making positions. So as soon as a position is taken, it makes loss. So immediately we have to keep 30 pips hedging order if the hedging facility is not available. The hedging facility is available. If it is not available, we can keep the stop or use the hedging in a pair across wherein the same currency is in the numerator. Say Euro USD, we wanted to take a buy position. Then Euro Yen, we can use it as a hedging. So that way we can try to use the hedging with the help of the cross so that the numerator euro remains in both the currencies. That will act as a perfect hedging. But it may not be equal to that of hedging in the same pair, but to a certain extent it will reduce the risk. And if the hedging is not available, or we do not want to complicate the trade by hedging it and things like that, we can use the stop of 30 pips. And once the position makes profit, we can simply keep stop at entry and remove the risk, and also eliminate the risk of making any loss in the trade. Subsequently, when the market goes up, use the trailing stop and also the trailing limit order or the take profit order. Thereby we will be able to maximize the profit. So we have to follow all the three steps just to have an idea what the forecast is. Then how the market is behaving. See, the forecast may say that there could be a very big gain, but if it is a holiday, then obviously there may not be a gain. So obviously market reading is a must, and we have to understand how the market is behaving on a given day, because we are going to do the trade live. We cannot do the trade of yesterday's market moves, but current market move only we can take the position and close it. So ultimately, the current understanding of the market is more important. We may use yesterday's data or about 10 days data or 100 days data or whatever it is, and always that prefix attached to that. The past performance does not guarantee the future. So ultimately, what is going to happen live is going to decide upon our trade. So our reading can go wrong. Keep always the assumption that our reading can go wrong. It is something like a null hypothesis. Then you try to use the trading strategy. Thereby, we will be able to expect the unexpected every given time, so we don't become stunned when the market makes a surprise move. At the same time, when it makes, we have got already the contingency plans to limit the risk, and we will not go in for crisis management. Because once you go in for crisis management, we will be spending quite a lot of time and money in order to safeguard the trade, but in that process, we would not have earned any money. So I'll explain the forecast for today with the help of the next slide. With regard to the market trading, so we make note of the initial lows and the highs in the case of the four majors and two commodity pairs. Euro formed the low 1.3184, 1.3210 is the high. GBP formed the low 1.6107 and 1.6135 is the high. They are not breached current market. I'll give the link for the live market code page. Afterwards, I'll explain what they are trying to do it with the help of the net changes. Then in the case of yen, 81.26 is the low and 81.67 is the high. They are not breached it. USD CHF 90.96 is the low and 91.15 is the high. They are not breached it. And Canadian dollar 99.22 is the low, 99.48 is the high. And in the case of Australian dollar, 1.0327 and 1.0384 are the lows and the highs. In none of the pairs, you find that they either breached the low or the high. So which indicates that new week They are just keeping the market very silent. You have to see how exactly they intend to make for the moves during the close of the Japanese session. Now, the expected market moves for today, and it is the last week of the month. So 23rd to 27th is the last week of the month, and 30th is the only day which falls on the next week. So when it happens to be the last week of the month, they will try to handle the derivative market like the futures and the options. So in order to handle them on either side, they are expected to make very big volatile moves in the market to hit the stops in such derived markets. So in order to handle such derived market, including CFD, what they try to do is they just pretend making a very big rise and making a very big drop during the course of the week using some trigger. Then again make the rise. So that way, anybody simply holding the long position, simply holding the short position, may not be able to exit wisely. So only thing is, we have to quickly grab the profit whenever you come to the last week of the month and the first week of the month. They are expected to make either way volatile moves, up and down moves. So when you see profit, grab it and then later on wait for the direction in which you wish to trade. That will be the safe way of doing trades. And the session timings, they are also mentioned here. 0030 to 70 is the Japanese session. They are expected to swing and firm up around 5:30 to 7. Then from 7:30 to 13 GMT, they are expected to swing and slide. So during the late Japanese European session, they are expected to breach the low and come down below, just give the surprise to everybody. Then US session 13:30 to 20:30 GMT. So the market is expected to swing and firm up again. So late European session and start of the US session, they are expected to make the slide and make a lower level consolidation with a downward stop and before making further rise. So aggressive volatile moves may be seen in Euro GBP and USD Yen in this week. So whenever there is a quick drop, you buy. When they are holding, avoid taking any position, either sell and buy or a buy and sell. Instead, wait for a quick drop to happen, and then once the new low is not breached for more than 30 minutes in a given session, you try to take a buy. You will be able to see definite profit in such trades. So let me minimize the PowerPoint presentation, and later on I'll explain to you what are the expected market moves for this particular week. Before that, I'll just focus the camera over the live market code page. Those of you who have not got the live market code page can probably make use of it. I go in the link. Now, Euro is currently trading around 1.319495. 1.3210 is the high. 1.3184 is the low. They set the low during start of the Japanese session, and subsequently they are not breached either the low or the high. Then yen again, you find the spread is very, very narrow in the case of Euro. 23 pips negative net change is seen. And in the case of yen, 20 pips negative net change is seen. GBP, 4 pips negative net change is seen. So you can understand it is a contrarian move. Euro and GBP are making the USD gaining move, and USD yen is making the USD weakening move. As a result, you find that all the yen crosses and a majority of the crosses are making negative net change. That means for the week beginning, when they are just making the negative net change in the crosses, that means they wanted to gain later on during the week as well as the day. So they are just making a downward move in all the crosses, make little more downward move later on during the day, and then start gaining the levels. So that is how they just make the moves for the week beginning. And in the case of USD CHF, 17 pips positive net change is seen, currently trading around 91.06, 91.18. And when euro has made about 25 pips negative net change, CHF has just gained about 17 pips. So now we are able to understand that the gain in the case of USD CHF is less when compared to drop in the case of euro. That means they wanted to push down all the crosses. Then in the case of Canadian dollar, again 15 pips positive net change, currently trading around 99.3638, and 99.48 is the high, 99.22 is the low. When compared to Australian dollar, which is making about 40 pips negative net change, Canadian dollar has gained only 15 pips. So Australian dollar from that 1.0384 quickly made a drop to 1.0327. Usual Australian session, they just make a drop before making a rise for the week beginning. That sort of moves, they had done it. In the case of New Zealand dollar, they just made about 25 pips negative net change when compared to the Australian dollar. As a result, Australian dollar and New Zealand dollar cross, which has made less a drop of 14 pips. So in all, you come across that they are making the downward move to start with. So a contrarian move is there. So that is basically indicating that they are trying to handle the cross. Then afterwards, during the course of the day, we have to see how exactly they are expected to make the moves. Now, I'll just answer to the questions which are asked here, then explain to you what are the expected market moves for this particular week. Then, what is the best time to enter into the market? That is, after 2 hours from the session time or after half an hour. 30 minutes from the start of the session is the ideal time to enter into the market, so that you will be able to see a definite profit. When they are near the low, you can take a buy. When they are near the high, you can take a sell. Definitely, you will be able to keep stop at entry in both the type of trades. And subsequently, you will be able to take a swing trade profit during the Japanese session. Don't think that Japanese sessions are always slow. There are occasions wherein they have made very aggressive moves during Japanese session and subdued moves during European and US sessions. And now you come across Japanese session is subdued, European and US sessions are aggressive. So it is not always mandatory that the Japanese session has to be very, very sluggish or subdued, and they can simply change it any way they want, depending upon the way in which they attract the traders to enter into the market, become addicted to trading, and then grab the money. Then see, what could be the expectations in Australian dollar? Australian dollar just made the drop, and probably they could make a downward stop and during late European session and then start gaining the levels. Irish FX. Do you expect Euro USD to breach previous high during this week? Yeah, they are expected to breach the high, and today they are expected to make a subdued move and make a downward slide, which could give that impression to the traders that euro, whatever euro and GBP has gained, they might lose. But suddenly, you know that after the drop, a lot of traders go and sell technically that it is going to make further drop. Then the players are expected to buy all such sells and take it to the next level. And last week, so they could make really aggressive moves in the market on the upside, but before making the rise, on a daily basis, they could make a good fall, about 50 to 75 pips. Quickly they may drop, and within 30 minutes they could rise and go higher above the high what they have set on that particular day. That sort of moves are expected. So whenever they make very quick drop, you try to buy. Don't simply, when the market is holding, try to buy and wait for the rise. Then during the drop, you might be stopped out, and later on they may rise, you may repent. So I am again and again telling you, during quick moves, enter into the market rather than aiming for small scalp trades. That way, you'll be able to really make good money from that market. Just a matter of 30 minutes to 45 minutes, you will be able to make about 50 to 75 pips profit. still control your addiction to trading, you will be able to become a wise trader. In Ahmed. Why note down the initial low between 2:30 and 3:30 GMT? Why is it called as the initial low and the high? See, the players have got certain techniques, and that is very essential for them to make silent communication. So for that, they have certain understandings, and they make a note of the initial lows and the highs. So if you note down at that time, you will be able to track the players. Simple. Otherwise, no logistics. Euro CHF does not seem to move through. We have been expecting the last couple of weeks. So get out of the range. Yeah, but they have just done that, and last week they have to definitely make a good move in the case of the crosses. So wait for this week. If it is not, then exit out of the position. I have been telling always that if you focus on Euro and GBP, the volatility will be there for you to exit. Simply holding the position for 2-3 days, you will be able to exit out of the position. But in the case of crosses, the holding might be for a prolonged period. Then you may lose your patience. So ultimately, more important is we are here to make money. Don't have any sentimental attachment to any currency pair. We just focus only on Euro and GBP and try to trade. And whenever you come across good spread is happening between the low and the high in the case of USD Yen, or USD CHF, try to take positions. And in the case of Canadian dollar and Australian dollar, they are just slowly making the subdued moves here, and they may lag behind. So when Euro is making a good rise, you may not come across Australian dollar making proportionate rise. So don't get disappointed. Focus on the four majors. So definitely you'll be able to, because many of the traders have got a tendency to hold the position and try to book profit without a stop and things like that. The best thing is try to take in Euro and GBP. We'll be able to hold it for 2-3 days or a maximum 1 week. We'll be able to see profit. But if you try to take in other crosses, you may have to wait. And whenever they are not making any big moves in the case of USD CHF, automatically CHF crosses become subdued. And this week they are expected to make the breaching of the high in the case of, that is why they have just made the down move in the case of Euro CHF to 1.2014, 1.2020 is the high, 1.2014 is the low. So they have slowly come down from 1.2050 to 1.2014 now. So this is a slow downward move. This is the normal strategy they use. No, every day about 5 to 10 pips drop. Traders lose patience just like that. Then get out of the position. Later on, they make aggressive gains. See that. Gold is still in the range, even with the strike over in India. What can we expect? No, see, there could be excuses like strikes and things like that. But as such, gold is expected to go up to 1700, 1750 area. And this week, we could come across lower level consolidation with a brief downward stop and then a quick rise in the case of gold. Probably 1630, 1628, if they show you, grab it, you will be able to book profit around 1750 area. In Grism. By a focus for Euro, USD rise and USD rise, a big rise is expected in Euro Yen. Yes, when Euro and GBP rise along with that of Euro Yen, I mean USD Yen, obviously it will be a contrarian move. Now on the downside, you find the contrarian move. Euro has made about 27 pips negative net change. Yen has made about 21 pips negative net change. You find Euro Yen has made about 51 pips negative net change. It's a cumulative effect. Similarly, GBP Yen Uh, GBP has made about 7 pips and 21 pips in the case of yen. So you find GBP yen is making about 39 pips. So this is how, in order to bring in the cumulative effect on the downside as well as the upside, they make such contrarian moves. Hope you are able to understand. So when to buy when they are making a drop like this? When they stop cutting the low in the case of euro, stop cutting the low in the case of USD yen, stop cutting the low in the case of euro yen. For 30 minutes during mid-session, we can initiate the buy. Now it is closer to that of 107.14, and they are not breached the low in the case of euro, not in the case of yen. So just wait for up to 6 GMT. If they are coming up to the low and just making a rise, you try to take a buy. Still, our reading can go wrong. Keep 50 pips hedging order. In the case of crosses, the spread between the bid and the ask is higher. So obviously you have to keep a higher hedging order as the stop, 50 pips. Then once the position makes profit, try to keep stop at entry. They are handling the N crosses on the downside now. They intend to make an upward move in the case N crosses. In Jason. Today we can see USD CHF 1092. Yeah, USD CHF could go to 9150, 9160 area. Slowly they could go to 92 by tomorrow. Today it appears the volume might be less because on Wednesday you come across FOMC meeting minutes. So many of the traders might be waiting for the outcome before committing positions. So the market volume could further dwindle. So that can influence the market to make only subdued moves. Tension. Australian dollar yen, when it is likely to go above 85. Australian dollar yen, again you find that it is making a negative net change because yen is making negative net change, Aussie is making negative net change. It is a contrarian move on the downside. And once it is over, they stop cutting the new low. Then you can initiate a buy, and they are expected to make the gain during the US session in the case of Australian dollar. And also in the case of yen, before that they could gain during European session. Then you find Australian dollar yen could gain levels by US session and go above 85 either today or tomorrow. Will euro breach previous high? Yeah, it is likely to breach. So let me go back to that of the PowerPoint presentation. Now coming to that of the forecast for this week. So today, as I explained, that they are expected to make the swing and firm up move, and later on swing and slide during the European session, and swing and firm up on the upside during the US session. And tomorrow, 24th, anyhow, I'll be giving it in my blog on a daily basis the expected market moves, but for recording purpose, I am just giving the forecast for the entire week. And 24th, they are expected to make a higher opening and start gaining the levels. That is tomorrow. They are expected to open high and gain the levels and make a small drop during the US session. And again, 25th, when all are expecting FOMC to make the announcement and things like that, they are expected to open higher, Euro and GBP, and make further rise. And late European session, they are expected to make a drop similar to this. And then after the FOMC, they are expected to make a very quick rise. After FOMC rate decision by 18:15 GMT on 25th, they are expected to make a very quick rise. I also given this particular report in FX Street, the experts' reports on FOMC rate decision, and they are expected to make the drop or a dip before the FOMC and then quickly gain the levels. The drop could happen during the late European and early US session, but afterwards, before and after that FOMC rate decision time by 18:15 GMT, they are expected to make the continuous rise on Wednesday. Then Thursday, when all expect the market to go up because of the risk appetite, they are expected to make the drop. In the case of Euro and GBP and also Australian dollar on Thursday. And towards the month end time, they are expected to suddenly make the drop and create a surprise to the other market. So if you are holding any buy position, then when they quickly gain the levels, book profit in them and stay without any position and or take sell positions in the case of Euro, GBP and Australian dollar, and they are expected to make a drop on 26th. And it will be just controversial to the move what they have done for FOMC rate decisions. Then on Thursday, US session drop, you can take a buy. Then Friday, again, they are expected to make a small dip on the downside, then start gaining the levels on the upside. Quickly gain all the levels. Thursday and Friday, you'll come across the market making a big drop and a big rise. And that sort of moves are expected. Anyhow, on a daily basis, I'll just do the market reading also. This is only the forecast. I will also do the market reading and try to give the refined forecast on a daily basis. In my blog, you can make use of it and try to see that you are trading without much of a constraint, without much of an emotional attachment to the market or to any currency pair or to any type of analysis. Just coolly watch the market and calmly take decisions. And when you calmly take decisions, your decisions will become wise. With regard to the initial lows and the highs, they are not breached the low and the high in the case of Euro, GBP, and also CHF, Yen, Canadian dollar. Also, they are not breached the low or the high. Australian dollar also, they are not breached the low or the high. So it is a really subdued moves happening at the current situation. So let me explain that derived forecast is 1/3 of our market understanding. Then market reading is another 1/3 of our market understanding. The trading strategy plays 1/3 vital role in retaining our profit and consistently earn from our market. So these things are to be strictly followed. Simply follow the forecast and blaming, simply follow the market reading and blaming, simply using the trading strategy without understanding how to exit out of the hedgings. These things, half-baked understanding. So obviously it may not be able to give a right picture of the market and you may find it confusing. But if you understand all the three, then you will not give any importance to me or any importance to the other forecast. You will give importance to all the three equally and do any sort of analysis. Ultimately follow market reading and the trading strategy as well. Then you will find that profit making is possible in the market. So I'll come back again on Thursday, 26th April, and review what calls I had just given, like the rise and the drop in the market, whether those things are happening or the market has just deviated from the expectations. So we will try to do all the analysis on Thursday and try to take up from there how exactly the weekend moves are expected to be. So you can follow me in the blog, and there I'll be giving on a daily basis the expected market moves. And if you've got any questions, you can ask me through email, dr@inoindices.com. I'm willing to answer to those questions. So I take this opportunity to thank FX Street and also you people who have come here and shown interest to learn my way of trading. And wish you all the best in trading and see you on Thursday. Thank you one and all.